Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. And what I was looking into is the energy crisis. The energy crisis is basically, it started in 2019. It started in Asia. They ramped up, came back down. In 2020, it ramped up again. They were still having shortages, and it brought the EU and some of the European countries, it brought them with it a little bit. Now in 2021, it seems like they're connected at the hip and they're just surging higher. And I'm talking about natural gas prices surging higher, not just a little bit. We're not talking 6, 7 per million cubic or per MMBTU. We're talking 100 euros per megawatt hour. We're talking about massive amounts of increases for natural gas prices. And it's bringing coal with it. It's starting to bring oil with it because they're starting to look for alternatives. It's going to bring uranium with it. It's going to bring everything higher. Now, I was looking on oilprice.com and I was looking at some of the articles just to see what they're talking about. I've positioned for this very heavily in oil and natural gas companies. I've done a lot of videos on this stuff about how bullish I am and how we could potentially go into a large deficit or energy problem a few years out. And that looks to be the case. We could have a large deficit in oil, and it looks like we're having a large deficit in natural gas right now, and it's going to impact everything. So I'm going to read some of the headlines and some of the kind of the gist of the articles, kind of to give you a little bit of a I say a big picture view of the energy crisis and what could potentially come in front of us. And it looks like I've been an ultra bull on oil, so I've been calling these ridiculous numbers. At least that's probably what a lot of people think. I was talking $300 oil. Looks like people are starting to turn to that type of paradigm that they're coming around. The ratios suggest a $300, $400 oil, something on the lines of that. 233 to 300 is kind of what I'm getting, depending on what the oil price or gold price is. But it looks like other people are jumping on board. So I'm going to read some of these headlines here. It says hyperinflation could send oil prices above 180. As the threat of hyperinflation grows in the face of runaway government spending, growing consumer demand, and a supply chain crisis, oil prices could well hit 180 by 2022. Now, I'm not calling 2022, but it looks like people are putting almost everything in 2022. It says the energy transition will take decades, not years. And that's kind of where I'm at. I think that we're going to be using oil, and we could have a problem with oil within this decade, is what I like to say. It says with natural gas, coal, and oil prices all soaring this summer, it is clear that a successful energy transition will take decades, not years. Some energy transition proponents may have confused COVID energy demand destruction with a change in consumer behavior. The truth is that an energy transition can only occur when clean energy can be provided both cheaply and reliably. And I would like to add to that, when electricity can be stored, because we don't know how to store electricity. What they did, and I'll jump in here real quick, is they basically jumped both feet right into the water and said, we're going to implement all this stuff. I don't think they thought this through. You have to upgrade the grid system and the storage capacity of electricity first, in my opinion. Then you can implement solar and all these other things. Then you can cut your emissions. You can't do it the other way around, because what they're doing is they're putting in all these solar and wind with no way to store electricity, which is very costly. And that's probably why they didn't do it. And then they're running natural gas and coal as a quote buffer for when wind and solar are not providing electricity. So we're getting ourselves in a crunch here, because if the wind doesn't blow and the sun isn't as shiny as we want it to be, then we're going to have to run our transition, the fuels. We have to run more coal, more natural gas. And I think what's happening in some of these areas is that they're not getting the emissions reduction. They're just burning a bunch more natural gas and coal. I mean, that's what's going on, which then increases the demand for it. And if you're not putting money into the production of coal and natural gas in the same amounts as we were before, and you're not really using that much less of it, you're going to run into a supply crunch. And that's exactly what happened. So let's read a couple more of these, because they're pretty interesting. It says Aramco, the natural gas crunch boosts oil demand by 500,000 barrels per day. It says the natural gas crunch has increased global oil demand by 500,000 barrels a day, said at the week's Energy Intelligence Forum. It says Energy Intelligence quoted the executive as saying that he expected oil demand to reach 99 million barrels per day by the end of this year. We've got some calls here, $200 oil. Traders are betting big on a global energy crunch. Some options traders are betting that oil prices could jump to $200 a barrel by the end of next year. Call options at Brent at $200 a barrel for December 2022 traded 1,300 times on Wednesday. We've got gas prices in Europe are now the equivalent of $205 oil. That's the natural gas prices. The gas price at the Dutch TTF hub, the benchmark gas price for Europe, soared on Tuesday to above €100 per megawatt hour for the first time ever. The energy crisis continues to worsen, and there is no immediate relief in sight, analysts say. And I want to touch on one thing here real quick. It started in 2019 in just one country or area. In 2022, it started affecting more than the one area. In 2021, where we are today, it's affecting many areas, and it's starting to spill over into America. The crisis is getting worse, not better. And when you start thinking about what this crisis can impact, this could be a lot more, it could be a bigger problem than what most people think. And it impacts everything. So what you're probably going to see is a wave of inflation coming, is what's going to happen. We are printing money at the same time that this is happening as well. It's going to filter its way and get into everything. And you're going to see inflation rocket higher, which then is going to put a ton of pressure on interest rates to go up. And another thing, everything is based off of energy. A future repayment, which is basically what a bond is and what dollars are. Energy backs our entire system. The energy becoming more expensive or becoming more scarce even, where we don't have it, could blow things up in the stock market and bond market. Because if we don't have something, all of these assets are priced off of future growth. If we don't have the energy for future growth, the prices are far too high and they need to fall. So this could trigger something that's bad in the stock market and even the bond market. And what you might see is that money's going to rotate somewhere. It's got to get out of there. And it's all of the money's been going into those two sectors, and it's going to go and flood into something else, which is probably commodities and precious metals. And that's what I've been talking about a lot on the channel. It's about positioning. It's about playing the game of chess and getting into a checkmate scenario where you're ahead of the curve. You're positioned before the move. Talked a lot about this on the channel. And if you guys are interested in learning this stuff, click subscribe. Give me a thumbs up for the content if you like the content. And there's one last thing I want to cover here is these are the energy prices right here. Look at the year to date, this column right here. What do you see there? Not only is it green, it's massively up. And if this is what the input costs are for electricity, for transportation, for a lot of the input costs for the making of products, this is going to impact inflation in a dramatic way. And I'm positioned directly in this stuff. I am also thinking that physical precious metals might be a really good bet, because that almost always follows right behind it. So it's just delayed behind it a little bit. So I'm diversifying out uranium, oil and natural gas. I'm looking at royalty companies that are going to provide a bridge to what's next, which is copper. So I like the royalty companies in copper, and I think they're going to have to. Copper's going to rocket higher. Now silver's also used in this transition. It's one of the metals. I think silver is very good. I think platinum's very good because it's also another metal that's used in the transition into a hydrogen economy. And if we don't invest in oil, if we don't invest in increasing production in oil, which is also the number one commodity, maybe about 50%, 40-50% or something like that is used as fuel. If we don't invest in it, we're going to have to go to something else. What is that something else? It's probably going to deal with copper. So I think copper, silver, and platinum are kind of the green metals. Tin's another one I think that's going to do very well. Some of them, I don't have a good plan on playing it because you're going to be playing it with mining companies. If energy prices are doing what is behind me, that means that the mining companies' margins are going to get pinched. So I play it with royalty companies. I play it with physical metals. Physical metals is the least risk way to play it. So I've been, and if you look from a monetary aspect, if you have energy prices going up, it could put pressure on monetary items as well. So I don't like stocks because energy is the input cost. They're going to get smoked. Rising interest rates are going to put pressure on PE ratios to contract. It's also going to put pressure on bonds to go down lower because the bond prices are going to go lower if the interest rates are going up, but you'll have higher payouts at a higher interest rate. And they'll continue to be higher and higher payouts with newer bonds, which will push all the existing bonds lower. Their net present value will be lower. So I've been putting a lot of thought into this, and I've positioned very well ever since the mid 2010s. I've been kind of waiting for this. So started a channel, help you. Hopefully this information helps you guys. I'm going to keep everything free. I'm not going to charge anything. I just want to help people, have them have this information in front of them so they can help each other. So I can help you out. So that's kind of why I started the channel, is to help people out through their investing and preserving their wealth. And my portfolio kind of looks like 30 something percent real estate, 25 something percent in physical precious metals, and the rest is in equities of some sort. And I have a very large, I'll say, royalty portfolio. I do have some diversified mining companies that are in everything, that pay high dividends. And then I've got a big energy section in the portfolio as well that deals with oil, natural gas, and uranium. And I should have got on the coal train as well. I was wrong there. But some people on the channel have got into coal. You guys have done incredibly well and good work there. If you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.